Good morning, good afternoon, good evening, folks. Michael Zuber, One Rental at a Time, back with his good friend and returning guest, Mr. Dan Bird. How you doing, sir?
Doing pretty well. Sorry I missed you last week.
That's all right. You were closing on that home that you were buying for your son, daughter-in-law, and grandchildren. So we want to wish you congratulations, and that had to be a lot of fun. Had to be a good day for the family.
Yeah, it was fun. I mean, we closed in almost exactly a month, so it didn't take long.
And you were able to get a rate lock, I'm guessing?
4 3/4.
Wow.
An investor rate.
Oh, investor rate. That's right. That's right. You were buying as investor rate. That's actually not that bad. I think if you were to price that today, it'd probably be 5 1/4.
Probably.
Yeah.
Yeah.
So,
I think we got in. I mean, it could have been lower. We've done it 2 months earlier, but
right. Yeah, you were caught in the, I mean, rates went up. I talked to a mortgage broker every week, one of my experts, and they went up 200 basis points in a 10 or 11 week period. That's never happened, or only happened one other time in the 80s when Paul Volcker was trying to crush inflation. So
yeah, I don't think it's over yet either.
Yeah, I don't think it's over yet either. Yeah,
I'm actually going to talk about the yield curve.
Oh, very cool. Well, do us a favor. Give us a lay of the land. It's been 2 weeks. What's going on? I think the market.
Right, so
go ahead.
When last we met, I talked about credit spreads. If you remember that,
I do.
Got quite a few comments from a number of your listeners about that particular topic.
Awesome.
In fact, I got some from my newsletter, other than your listeners, saying it was one of the best newsletters that I've sent.
Awesome.
I explained how it works and how to do it. And I've had a few of your listeners send me notes asking me more details. How exactly does that work again? So, I mean, those videos are out there if people want to go back and look at them.
Yep, you have your own playlist. It's I think it's just called Dan Bird. I'll actually check while you type this. Right. But yeah, you have your own playlist that is growing.
It was like March 12th or early March is when we did that one.
Yep.
So I'm doing it for income, and I'm averaging about $10,000 a week.
Nice.
With credit spreads. So.
Okay, very cool.
I've been retired for 6 months now, and I've pretty much now been able to replace my income.
Well, that doesn't suck.
Right. That's nice. So I'm gonna share my screen here, and we're just going to talk about the general state of the market right now.
Yep.
We've had a nice rally.
We have. I was missing you the last 2 weeks.
Yeah, we can talk about Peloton too.
Yeah, we could. Okay.
That was the last time you and I talked, actually. So anyway, can you see this?
I can.
All right. So this is the yield curve.
Okay.
And this, you can see over here on the far right-hand side, this pink line at the bottom is the zero level. And we are rapidly approaching it.
Yep.
So the yield curve's flattening. I had that in my newsletter.
Yeah, it actually, I don't know if you saw it. I watched the entire spectrum, and we actually went negative on the 5s and 7s.
Right.
Yep.
Yep, exactly.
And this is the 2 and 10s, obviously.
This is the 2 and 10s, which is the one that
most people watch. Yeah.
Right?
Yep.
So you can see back here in 2006, 7, 8, here's the gray area is a recession. You can see here's the 2001 recession back here, right at the tail end of it. But the most important thing is when it goes negative, when there's a yield inversion, it's a pretty reliable warning sign that a recession's coming. And you can see back here, the first time it went negative was in 2006. So it was about 1.5 years before the actual recession started. But if you look at when it came out and went back positive again, you could kind of look at 2 of them here. One was March 2007. The other one was June 2007. And that was about 6 to 9 months before the recession started. Okay.
Wow. Okay.
And then fast forward, and this green line is the S&P. So you can see what the market looked like. And if you fast forward over here to the 2020 COVID crash that everybody thinks came out of the blue, out of nowhere, and because it was a pandemic, and who can predict a pandemic, right? Well, apparently the yield curve can.
Yeah, I don't know if that's fair. I think the yield curve is something I've been watching for a long time. I think what we were set up for was a recession. I think the pandemic threw everything off. Yes, it caused a very short one, but to say the yield curve predicted a pandemic is
no, that's not what I'm saying.
Oh, okay.
I'm saying that nobody knew that a pandemic was coming and that the market was going to crash as a result of it.
Oh,
I mean, lots of people were expecting a recession at some point. So,
correct. Yes.
And this certainly confirms it, because this one here was August 2019, but you can see how quickly it recovered.
Yeah.
Yield curve.
Yeah, I remembered it was only like a week or 10 days it was negative. It was pretty short.
Yeah, it was like a week. Yeah. But 6 months later is when the recession happened. It was a pandemic recession, and it was a very short one. But it was still 6 months, and the yield curve predicted it.
It did. Yeah. Okay.
So it's been pretty reliable. If we could go back before here, there was one before 2000 also, in 99, I think it was.
So I just want to make sure I've got the scale right. So what we're saying is in 2011 and 2010, the largest spread of the 2 and 10s was about 2.9. Is that what this says?
Yes.
Okay, I got it.
Yeah, this chart essentially is the 10-year minus the 2-year.
Correct. So the difference between a 2-year and a 10-year was roughly speaking 3%. So correct. If it was 2 and 5 or 3 and 6 or whatever. Got it. Okay.
That's right. Exactly.
All right.
So just want to point this out. Now, does that mean a recession will happen? Who knows? I don't know. I'm just pointing out that the yield curve is getting close to zero. You can see back here in 2019, it got down to almost the same level, actually at that same level in mid 2018.
Yeah.
So, it took that long. It took another over a year for it actually to invert. So that same thing could happen again. I mean, it could bounce around the same area for another year before it inverts.
Yep.
I don't know. I don't know what it's going to do.
Yeah.
We can continue to watch this and we'll see.
Oh, I can tell you it's going negative.
Yeah. I mean, I think it is too. And it's been, you can see the slope of this. You see the rate of change of this thing.
Straight down.
Just going straight down right here. So it's heading towards negative pretty darn fast. But it's not there yet.
No,
it is a good predictor. It's something that we'll continue to watch.
Okay.
And I'll guarantee you all the algorithms are watching.
No, that's exactly what I'm learning by our discussions every week is the things that you are looking at and talking about. That last statement is key. The algorithms are looking too, right? When this goes negative, the algorithms will do something.
That's right. And it's a different environment for doing stock investing these days, because for that reason. And you have to start to think like a computer. You have to start thinking like AI. Right? You have to understand what they are, and it's all math.
It's all math.
Yep. Technical analysis using charts like this is math. That's all it is. It's a combination of math and it's also psychological, analysis as well, because everyone else is watching the same charts.
Yeah, exactly.
Not even the algorithm, not just the algorithms. Human beings are watching the same charts too. And that's why it works, because everyone's looking at the same stuff.
Yeah, I like it. Okay, very cool.
All right, so let's look at a couple of other ones. This is I didn't put these in any particular order, just how I was sort of my stream of consciousness this morning.
Okay.
This one is a comparison with the VIX. This is the last 2 months, so it's a recent. You can see the rally right here from the last 2 weeks.
Okay.
The chart on the top is the S&P.
Got it.
I'm sorry. Yeah, the chart on the top is the S&P. The one on the bottom is the VIX.
And then the lines are various moving averages.
Yeah, these are moving averages up here. You can see the rally right here. It started on the 14th, 2 weeks ago. We had a big drop on that day, and that's when the rally started, right at the end of that day or the next day.
Okay.
But the important thing to look at here is when the VIX hits this peak up here above 36, you can see it hit it 3 times. You can follow that up and you can see the low. Here, it hit peak here, that was the low. It bounced. Hit a peak here, that was the low. Now it came back and hit another low, but the VIX actually didn't.
Got it.
So that was the first clue.
that was a signal. Yeah.
We're getting ready to bounce.
Okay.
And then the other side of it is down here. When it gets down, around 20 or below 20 is when it peaks.
Interesting.
And we're not there yet.
Mhm.
So I think we still have a little bit left to go in this
Okay.
rally,
Mm.
but we're close.
Yeah.
We're close to it.
All right.
So this is what I call my bottom finder.
Mm.
This is a little busy, so you know I can look at it, understand what it's saying, but these blue lines right here is basically identifying bottoms.
Okay.
So this one here shows it right here on the 16th, March 16th.
Got it.
So 2 days later.
Okay.
This is the S&Ps. This is the important one. This is the actual market and what we're doing right now. The market is here in the middle. Let me turn this off. The market is here in the middle. This is the S&P.
Mm-hmm.
These gray shaded areas are the average true range.
Mm-hmm.
So the dark one in the middle is a 1 day average true range. That's how it moves in 1 day.
Mm.
The next shaded is 2 average true range, and the last one is 3. So 3 times the average daily range.
Got it.
And you can see whenever it gets to 3 times, that's very, very extreme.
Mm.
Very extreme. So when you get to all the way down to 3, almost to 4 times down here, the market bounced.
Mm.
Get down here right on the edge of 3 times, the market bounced, came down, didn't quite get to 3 times that time, and the market's bound, just took off. Now on the upside, you can see over here, when it gets to that 3 times, and when it got way above the 3 time up here, then that's an extreme reading.
Mm.
And that's when it usually starts to come back down again. Markets will always, and stocks too, for that matter, will always revert to the mean. The mean is this blue dotted line right here.
Mm.
Again, kind of thing that algorithms look at.
Exactly.
All right. So right now we're not at that 3x yet, but we're close.
Mm-hmm.
So let me do that one last. This is the growth versus value. So growth starting in December and then really started hitting its lows in January. Growth versus value started to decline.
Mm-hmm.
In other words, growth was underperforming value. And if everyone remembers the market did really well in December, right?
Mm-hmm.
And then started to decline in January.
Mm-hmm.
In January is where it really kind of fell off a cliff and continued going down. But you can see that growth started to underperform value way back here in the beginning of December. Mm-hmm. So big institutions had stopped buying and in fact started selling all of the technology names.
Yeah.
And growth continued to underperform until the 14th, March 14th. And then growth started to outperform. And it's still outperforming, but it's hitting this area of resistance right here. Mm-hmm. So again, it might have a little bit more left in it. And if it can continue going up, that's going to be a really good thing. But we'll have to see. We'll have to see what happens. All right. So these here, this is I've only got 3 more to show you. And then we'll just talk in general about where I think the market's headed. Okay. This is the triple Qs versus the SPY. So this is the triple Qs is an ETF that represents the NASDAQ. Mm-hmm. And SPY is an ETF that represents the S&P. Mm,
okay.
All right. So it's another way to look at growth versus value, if you will. What you'd like to see when a market is moving up is you like to see NASDAQ outperforming the S&P. Mm. So this pink line is the 8-day, and this blue one here, dark blue one, is the 21-day. You can see that the NASDAQ was outperforming up until the beginning of December, just like I showed you before with growth versus value. And then it crossed over right here. And it crossed over the 50, and then it just dropped off a cliff starting in January. Okay. So the NASDAQ was underperforming the S&P. Mm. All right. All the way up until last week.
Yeah.
Right. Mm-hmm. And now the NASDAQ is starting to outperform the S&P. And you can see down here, this is actually the S&P down here. And I drew a line. Here across the tops. This is the downtrend. So the downtrend started here in the beginning of January, and we couldn't really break it. Every time it rallied, every time it rallied, coincidentally, and it's funny how these things work with technical analysis. For some reason, the market knows where this line is. I drew the line. The market didn't draw it. How does the market know where my line is?
Yeah.
Right? All I did was drew it across these two tops. When we hit a lower low right here, I just drew a line across these two tops and extended it. And the market kept coming up and hitting that line and getting rejected. Again, that's what the algorithms look for. But look what happened last week.
Yeah,
A
breakout.
week and a half ago, it broke out. So the algorithm saw that breakout as well and started buying.
Okay.
Now, you can see this resistance line right here that goes horizontally, the pink one. It's at 4,600. That's where I think we're headed. This next one is the same chart, but on a much closer in view. So this is just a 4-month chart.
Okay.
This is what it looks like. We're looking at just 4 months. And you can see again, this big downtrend, triple Qs versus the SPY. So NASDAQ versus the S&P, big downtrend line. And right here is the breakout, the uptrend. It's breaking out. You can see the 8-day, the pink one, crossing over the 21-day, the dark blue one right here. And it's still above it, but it's getting close. So we need to see this pink line continue going up.
Okay.
Right, for this rally to continue. It's starting to level off a little bit. And then this is the S&P down below with that same line drawn across the tops. And the breakout right there, and there's 4,600, which is a resistance. You can see it was support back here. Support, support, support. Broke down below it, came back and hit it. Now it becomes resistance. So support will turn into resistance eventually.
Right.
So now it hit it, resistance, resistance. And now we're going to go up and try to hit it again. So 4,600 is a really important level to watch.
Okay.
I think we'll hit it this coming week.
All right.
Now, what will happen? I have no idea what's going to happen.
Right.
It could break through, which means we have more upside left, or it could get rejected again, which means we start to head back towards the lows.
Okay.
Just something to watch, just like with the inversion.
Okay.
Now, that other one that I showed you, this one, this is a revisit of our favorite Cathie Wood ARC portfolio versus the NASDAQ. The NASDAQ is the pink line.
Okay.
And all of the other ones are ARC portfolios. The dark blue one down here is the innovation, which is the one that most people talk about.
Right.
ARC innovation. This is the dark blue one down here. And there's one up here, which is ARQ. I can't remember what that one is, but one of them is outperforming the NASDAQ, but most of them, including the innovation one, is underperforming. And you can see even with our rally last week, I mean, the rally continued going up, but the ARC is starting to roll over.
Yeah, I think again, I don't really follow her stuff because I think she was lucky. I think a lot of her success is luck and timing and having a hot hand when the Fed was lowering rates. But and she didn't change, so she had 2 good years. Now she's the largest seller in a lot of her stocks as she's having to sell. And I think she just sold one of her biggest winners. I heard she just sold Tesla.
Oh, really?
Yeah, that's what I heard last week.
Oh, interesting. I've been telling people that Ford and Tesla are going to pass each other. They're going to cross each other at some point.
Okay. Interesting.
Ford's going to go up and Tesla's going to go down.
Oh, wow. You just pissed off half the audience. Everybody's a Tesla fan.
Oh, come on. They have to be knowing that.
I don't, dude. I don't play favorites, but no, based on my comments, no, Tesla's going to the moon.
All right. Well, hope they have enough oxygen there.
Yeah, I hope they have trailing.
So
stocks.
this is that portfolio that I set up.
I was going to ask you. Yeah. Yep.
It's actually flat right now.
Yeah. So we started this, folks. If you haven't, again, Dan has a playlist. I just looked it up. It's called Dan Trading Stocks or something. Yeah, Dan - Stocks and Charts. So we started this. You can go back and look at this playlist. You did this 100 grand, right? Was the
just a play for pretend portfolio, 100 grand, evenly divided across all of ARC Innovations holdings.
and it started on the 18th of February. So we are about 5 weeks in, and she's flat. She's basically even.
Yep, it's flat. This shows you the performance of each of them.
Yeah, which is a lot better than a few weeks ago, where I think.
Yeah, 3 weeks ago there were only 3 that were green.
Yeah, exactly. So.
The worst performing is TSP. UiPath is the next worst down here.
Yeah.
Bottom.
Okay.
So.
Very, very cool. Yep. Well, thank you for doing that. So, any closing thoughts on where we are?
Let me show you my newsletter.
Yep, please.
For those that are interested, I do a newsletter every week, just for myself, my own purposes, so I can analyze. Do kind of what I'm showing you here is what I do. I look at the charts and see what what the sentiment of the market looks like. Kind of plan my course of action for next week. I've been mostly just doing credit spreads lately because I can play it either up or down. Doesn't matter which way the market goes.
Right. And
generate income pretty quickly. But this is an excerpt. So I put some cartoons, and right here, IBD says there's a confirmed uptrend in the market. And this is the yield curve chart that I showed you before.
Very, very cool. Well,
actually, this one goes all the way back to 1976. So you can see again when it turned red, and then when the recessions happened.
Yeah, the yield curve has been a decent predictor all the way back to 1955. I've gone back as far as 55.
Right.
Yeah, it is watched, and to your very earlier point, we'll wrap up here. The machines are watching too.
Yep.
And they will take action. So Dan, thank you for all you do. If you want to get this newsletter, it's breakpointtrading@gmail.com. Thanks, bud.
You bet. Thank you.